Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday, 30th of October, recording the video now 5 minutes to 6 p.m. Eastern Standard Time. I was expecting downwards movement for Thursday. That's not what happened. We have another green candlestick. Upward movement invalidated the hourly wave counts with a new high above 1991.4. The daily wave counts remain valid though. I have a new hourly chart for you for the alternate bear wave count. We'll go over how that has a better fit when we get to hourly charts. But overall, I'm expecting for all my wave counts at this stage at least another 1 to maybe 3 more days of upward movement. The target at this stage is 2012. Let's have a look at the daily wave count for the bear wave count. The bull and bear wave counts see primary waves A, B and C in exactly the same way as 1, 2 and 3. For the bear wave count it's an ABC zigzag up. For the bull wave count it's a 1, 2, 3, beginning of an impulse up, because the subdivisions in ABC and 1, 2, 3 are exactly the same. All of my wave counts have intermediate waves 3 and 4 within this final fifth wave impulse over here, because here intermediate wave 3 lasts 455 days. It's a very long lasting wave, but it's less than 1 point off. It's 0.76 of a point short of 2.618 the length of intermediate wave 1. Intermediate 3 contains the strongest upward momentum, so this wave count is supported by MACD. I'm really confident that the third wave ended there, so that means the fourth wave ended here, and this is where the fifth wave begins. The only question is the fifth wave over, or is it only almost over? This main wave count sees within intermediate 5, minor 1 here, minor 2, minor 3, 4, 5, a short little fifth wave. There is a Fibonacci ratio in here, but the problem here is the proportion of minor waves 4 to 2. Minor wave 2 is a zigzag, so there's good alternation. Minor 4 is a double combination, but it's only half the duration of minor 2. If we have had a trend change here, it's either at cycle or primary degree. The bear wave count sees the trend change at at cycle degree. The bull wave count sees the trend change at primary degree, only 1 degree lower. But the difference in how much downward movement they expect is enormous. For this bear wave count, we need to see a nice clear 5-wave structure down at intermediate degree to have any confidence whatsoever in this trend change up here at cycle degree. If we have a trend change here, then if we're in a new downward trend at cycle degree, the first wave should be unfolding as a leading diagonal, because this downward movement subdivides best on the hourly chart and 5-minute chart as a 3-wave zigzag, and at the daily chart level it has a pretty clear 3-wave zigzag look. So we may have a zigzag for 1, an almost complete zigzag for 2, which may not move beyond the start of 1, above 2019.26. These trend lines now are all breached. That's very technically significant. The upper two trend lines, the aqua blue trend lines, are not an Elliott channel. These are classic technical analysis lines drawn using McGee's approach as outlined in that classic technical analysis of stock markets. The lower one has been breached by over 3% of market value, supporting the idea of a trend change. The dash maroon channel is a corrective channel drawn around this big upward zigzag for cycle B or X. The lower edge has now been breached for the first time in over 5 years. That's highly technically significant. Let's have a look at how this upward zigzag may be unfolding on the hourly chart, where it begins here, is this point here. So far we may have a 5, 3 and an incomplete 5. This final C wave may be unfolding as an ending diagonal. Within the ending diagonal, all of the subwaves may only subdivide as zigzags. That's how they fit best on the 5-minute chart, and it's what they look like so far on the hourly chart. At 2012, minute C would reach 0.382, the length of minute A. This pink channel I will discard after today's analysis. It's not showing us at all where upward movement is finding support. The pink channel is drawn using Elliott's technique for a correction around this possible upward zigzag, but it was clearly breached, yet price continues higher. I think a best fit channel may be in order for this idea. Sometimes when fifth waves unfold as diagonals, they tend to do that though. They tend to show a lot of weakness. Diagonals have some corrective properties. They subdivide as zigzags. Zigzags are corrective structures, and they come right before a trend change. So this is a terminal structure. If I've got this diagonal right, it's a final fifth wave, and it should be over soon. Within the diagonal, the fourth wave, when it arrives, should overlap back into first wave price territory. The rule for the end of a fourth wave of a diagonal is it may not move beyond the end of the second wave below 1969.04. If we see this upward movement from this low to this high as a complete five-wave structure here, the Fibonacci ratios within this upward movement are not nearly as good as the alternate bear wave count, and the fit doesn't have quite as good a look either. That reduces the probability of this wave count today. This is the alternate bear wave count. It's absolutely identical to the main wave count right up to this point here, and then within intermediate 5, what if instead of minor 1 being over here, it was over down here? Now we have a 335 expanded flat for minor 2, an impulse for minor 3 which has a 1.618 price ratio to minor 1, and a zigzag for minor 4. We have perfect alternation between minor waves 2 and 4, and they are much better in proportion. But the problem with this alternate wave count is this movement here. This final fifth wave has a suspiciously three-wave look to it on the daily chart, because there's a gross disproportion between this fourth wave, double combination, and this second wave, very quick, brief zigzag, giving minute 5 a very strong three-wave look. That reduces the probability of this alternate wave count, but it's about the only problem I see with it. If we have the strong breaches of these trend lines, it may be an indication not that we've had a trend change here, but that we're about to have a trend change really soon. For this idea, I don't have a target for the upward movement to end, but I wouldn't be expecting much movement at all above this all-time high to new highs. I don't have a target because already at intermediate degree there's a great Fibonacci ratio between intermediate waves 3 and 1, and at minor degree there's a great ratio between minor waves 3 and 1. Let's look at this on the hourly chart where minor 4 ends here, this point here, and at minute degree as well there's a great, almost perfect ratio between minute waves 3 and 1. With all of those ratios at those 3 wave degrees very, very good, I'm not actually expecting to see a Fibonacci ratio for minute wave 5 or minor 5 or intermediate wave 5, which really does make target calculation very difficult. I can say though that I would expect this final fifth wave for minor 5 to move at least slightly above the end of 3, so a slight new high above 2019.26, but not by too much. I would not expect this fifth wave to be extended. I would expect it to be relatively short. And so far it's not showing very clearly and obviously sizable subdivisions within it. On the daily chart, it does not look like it's extending. Again, the ending diagonal structure is exactly the same, and I've provided the details of that on the 5-minute chart for you. If I've got this right, it's a terminal structure, and it might be over in another 1, maybe, but more likely 2 or 3 days. It should be a bit time-consuming, choppy, overlapping, slowly moving upwards, while MACD continues to slowly move downwards, providing more divergence at the hourly chart level. We have some strong divergence at the hourly chart level and daily chart level and weekly chart level, all supporting the idea that we've either had a trend change or we're going to have a big trend change coming up really soon. Within the diagonal, the fourth wave can't move beyond the end of the second below 1969.04. And this is the bull wave count. As I said, for the main bear wave count, the subdivisions between ABC and here for the bull between 1, 2, 3 are exactly the same. So that alternate idea for the bull wave count also works, for the bear wave count also works exactly the same for the bull wave count. For this idea, what if we've had a trend change here at primary degree? Then I'd expect primary 4 to show alternation with primary 2. Primary 2 was a deep zigzag lasting 13 weeks, so I'd expect primary 4 to most likely be a flat combinational triangle lasting at least 13 weeks, and if it's a combinational triangle particularly, probably longer, maybe 21 weeks, so it has a 1.618 duration to primary 2. Primary 4 is most likely to end within the price territory of the fourth wave of 1 lesser degree, so below 1730 and above 1646. For many of those possible structures this fourth wave could see a new all-time high. Intermediate wave X or B could move beyond the start of W or A, as in an expanded flat running triangle, or quite typically a combination. The upward movement, though, does need to be a three-wave structure. Let's look at this on the hourly chart, where the low here is this point here, and the subdivisions within this ABC are exactly the same as the subdivisions for the main bull wave count at the hourly chart level. The target's the same and validation point's the same. All of my wave counts have an ending diagonal unfolding in this either fifth or C wave position. So overall, more upward movement yet, probably for a few days. That's all for me today with your S&P analysis, and I hope all our members are having an awesome day.